Devina Mehra joins us now. Let's connect with her and let's take our conversation forward. Devina, good morning. Thank you for joining us. It's a sea of red for IT. Is it deserving decline in some of the IT stocks, or this is market reaction which is on the extreme after Infosys numbers?
I would go more towards the latter, that it is a big knee-jerk reaction to results that came out. But is it that is that showing that there's going to be some secular disaster in IT? I don't think so. I mean, what I think this is showing is that yes, there is there are issues in the Western economies, and therefore the sales cycle gets extended, and therefore you don't land as many deals as you hope to within a quarter or so. But I do not see it as being something of a disaster and which will last forever. That's one part on the business side, and there's always where you are in terms of valuations in what is built into a stock price, whether we are talking economies or sectors. I always say that there's no one-to-one correlation, that you can't wait that for things to really improve and then buy something, because by that time the time is past usually. So that is something one has to look at. So if you look at for instance, last year if you looked at Europe, and we actually made that mistake, that we were sitting at beginning of October and we said like, now the news from Europe is all going to be very, very bad. So definitely that's not one place where we want to be overweight. But then, both the last quarter of last year and the first quarter of this year, Europe has been the standout performer. So both these factors together, I think it's a bit overdone for sure for IT.
But Devina, has the time come to buy IT just yet? That's the other question, right?
I would say that it is somewhere in the range. I mean, we're still evaluating with our systems, but my first reaction would be that it is definitely in the range.
Devina, but I look through IT and I say, okay, the sector will have a relevance. 2 years, 3 years out, it will have a relevance. But I may get growth between 8 to 12%, 8% on a bad year, 12 to 13% on a good year. So for an investor, where is the upside?
I mean, how many businesses do you have where you have something of a predictability in the first place, and also a rupee dollar hedge? So that's the other part which IT provides. And so that's the other question, that where does that show up? And as I said, this is a really a bad year for their buyers. But this is as a sector, again, if you look globally, the move is towards more and more digitization. In fact, if you go back a year, last year beginning, the issue in IT was that there was too much demand for people. So there was margin pressure from the cost side, because the whole world, whether they were a technology company or not, had to and was moving to technology, which is why there was demand for that many people, along with the startup ecosystem. So that last year we were talking of a different problem altogether, that the whole world wants to go tech, and therefore will they get enough good people? And now we are saying that that the demand will not be that great. Tech is not a mature business in that sense that you will not see growth. Again, we are talking at a trough of a cycle in terms of the economies which they cater to. So I don't think that's the thing, that demand is going to dry up for IT.
Devina, what to your mind is going to be the central market talking point for next couple of months? In the month of Jan, it was Adani. In the month of Feb, it was budget. It's been inflation for last 1 year, and it's been the US regional banks for last 6 weeks. Has the puck now moved decisively from these 4-5 factors?
Talking points, actually, you should be worried about. I don't have to go out and talk every day on the markets.
No, that's why I'm asking you, what do we talk? That's why we are asking you, what do we talk?
What to my mind is the going to be the theme, at least for the Indian market, which will drive a lot of factors, and that is crude. So, compared to last year highs, we are down 35%. And if it sustains there, that is going to drive a lot of things in India. So if I look at RBI, for instance, they've paused on the interest rates, and to my mind, they are waiting for that maybe crude will do the difficult part. So in India, that drives a lot of things. So, if crude remains down, it is not just crude. In fact, the part that you're never sure of is whether it will get passed on to the direct fuel, petrol, diesel, all of that. But it also drives a lot of downstream products. So if those prices come down, so that helps, of course, inflation control, because in earlier rounds, whatever inflation coming down we've seen in India has been driven by food, which can't go on forever. Only in this round, we saw some other factors change a bit. So inflation control, it therefore can drive demand. So as far as sectors are concerned, if input prices go down, that helps a lot of sectors. So it's like from FMCG to chemicals, textiles, paints, even large parts of the cement cost are linked to this. So there are a whole bunch of sectors where then companies can take a call that do we reduce prices and therefore get a demand boost, or we let the margins expand, or a combination of the two. So if I look at the economy as well as corporate earnings, to my mind, that one theme which can change a lot of things is crude. In the US, it's a different thing. The Fed is talking of something else doing the heavy lifting. You mentioned the banking crisis, so that means tightening credit and tightening financial conditions. So Fed is waiting that whether that itself can do a lot of things which are otherwise supposed to be achieved by increasing interest rates. And so therefore they may not increase interest rates that much if those things happen. And in India's case, I think it's a bet on crude.
Devina, you continue to remain pretty optimistic then when it comes to the entire capital goods, manufacturing theme. So in light of that, what is it that you're expecting in Q4 by way of numbers? Anything in particular that you'd be keeping a close eye on?
Q4, you will have a mixed bag. As I said, if the crude remains at lower prices, it is in Q1 that you will start to see that impact overall. And yes, you're right that we have been very positive on industrial and capital goods for now over a year and a half. So from October 2021, and that's been a big performer for us because stocks have doubled and tripled also. And we still remain overweight, though. I mean, we've been booking profits. So last quarter also we cut a bit. This quarter also we cut a bit, but relative to the index, we are still way overweight. So that's a sector that we continue to like. We've done some reshuffling also, moved from something where it looked like the move was over to something else. But that sector still we remain positive.
So Devina, if let's say in the near term, flows normalize, and which is what is happening globally. Money is moving back into emerging markets, dollar index is weak. Do you think in that good old comparison which has haunted India, China versus India, India versus China, actually could work in our favor? Because the money which has gone into the Chinese stock markets last year and beginning of the year has not given satisfactory returns.
It gave returns for a while. In fact, that somebody was asking us that, one thing which worked for you globally, and that was it. We got into China and Hong Kong at the right time, and we got out also at the wrong time, at the right time. I mean, we still have China, but now it's mostly non-tech China. So the tech part was that. So after that, Taiwan was the one which looked good along with semiconductors. So we moved to that. But as far as these FII flows are concerned, I've said it before on your channel also that there is no point spending time focusing on that. And if you look at India versus China, since 2007, the Chinese market is still down so substantially. I don't know what the number would be just now, but it is still down way below the 2007 highs, in spite of the economy going up 6-7 times. It is futile to look at those sort of things. And as I have said earlier, when we used to track it, we no longer track it. The FII flows versus the market movement has no correlation whatsoever. So I only now track it from the point of view of impact on balance of payments and FX reserves, but not from the point of view of markets at all.
Okay, Devina, good to have you on the show as always, and keep putting up the food pics. We enjoy just looking at them. You've been gorging on some delicious ones of late.
A lot of festivities.
Good to have that here.
I'm willing to participate in all, from Easter to Bengali New Year.
Absolutely, and especially for the food. But good speaking with you as always, Devina. Good to have you on the show.